Well, we've got Wall Street back at its games, huh? Market down 250 yesterday. Today we reverse and go up 236. And let's not talk about why it happened, but let's just say we called for this to happen. Good evening. It's Brian Paragamian, senior trader and co-founder of ProfessionalStockTraderLive.com, bringing you Tuesday evening's update for February 24th. Well, let's just get right into one trade that we identified this morning that we talked about that might be a little bit on the risky side, but we really didn't think so and saw no reason why this stock to sell out the way it did. And the name of the company is Valeant Pharmaceuticals, the ticker symbol VRX. We noticed the stock came out with better than expected earnings today, gave upward guidance, the stock opened higher, kind of chopped around, and then broke hard down into the low 18s. Well, we continued watching the stock and noticed that the stock went sideways in here, and we decided to just get long it for a day trade, close it out, market on close. We bought in this 1825 to 1830 area immediately right after we got in. The stock started moving up here, and we closed it out on the close of market today, and we netted almost nearly 1 point. We did have one other trade that we did trade AEM from the long side, and we kind of thought that might be a trade that we might get stopped out on, and we didn't mind it because it was a very, very small position. Despite us being very bearish on gold, we thought we'd play that side and actually hoping we'd get stopped out because we were long a ton going in today, and we added to our long position. And let's talk about it. DDM, we sent out a swing trade alert this morning at 2104. The ETF that mimics the Dow closing at 2228. We're going to kind of go over what we're sitting in right now and what our expectations are. We're long Goldman Sachs options, GS. The stock had a fantastic day today. We put out a swing trade alert on that yesterday, and as you can see here, we are long the Goldman Sachs March 80 calls from $10.20, closing at $16.60. So we're way ahead on this trade. We're staying long into the morning here. We're hoping Obama comes out, President Obama comes out, gives some positive comments. We think the stock market should, at a bare minimum, rally an additional 100 points. And let's just talk about why we at least think this is going to happen. Well, if we look at this chart here going back, 74.49 is where we broke down from, and as you can see over in here. So why can't we rally back at a bare minimum, if nothing else? That's kind of where you have a downtrend line that comes in. We actually think in time you can rally even higher than the 74.49. We actually think you can come up and try and approach this downtrend line that goes back to early January, which comes up in the 8,000 area. We thought the market was ready to turn any day. The McClellan oscillator at the end of yesterday was at a minus 366 reading, absolutely extreme readings. We turned back in October from readings of down over 400, back in November from readings of down in the same territory, and we thought we were ready to turn, thus the reason we continued pressing the long side. And now, as you see here, we are on a slight, or we are on a buy signal here. As you can see here, in this example here, it is the orange line. Generally, it is on our other charts, the dark line, but it is the orange line here that has crossed over, given us a buy signal. Even yesterday, despite the market being down, we were on a buy signal despite that, and that put us on the bullish side of the ledger, in addition to many of the other factors we've been talking about over the past several days. So we got the big rally. We think the rally is going to continue. We need to have some positives come out of the Obama speech tonight. Otherwise, we could lose some ground. But net, we think this market is positioned and ready to move even higher. Another position we are in is Research in Motion. We are long Research in Motion from 39.5, closing at 40.42. We are long some Apple options, which, if we can get these pulled up here, we are long some Apple options from $1.50, which currently we are underwater still, currently at $1.20. We think this here is going to give us the opportunity to get out of them absolutely at a profit, if nothing else at a break even, which we may elect to get out. But look, every swing trade is not going to be a winning swing trade. But from the standpoint of we are long Apple options, trapped 30 cents, not a big deal, because as we look again, we're long Goldman Sachs options from 10.20. We're up $6.40 on that. We're long RIM, the stock itself. We're long from 39.5, closing at 40.42. We're up 90 cents on that. We're long DDM. We just put that out today on a swing trade. We're long from 21.04, 22.28 close. We're ahead on that. So net, we've got absolutely great trades on right now. We're looking for continued follow-through. And those of you that don't have the opportunity, as I've said before, to get on our live webcast, at least turn the audio on at your work if you have that opportunity, so you can go ahead, learn a few technical aspects, and maybe get lucky enough to where you have the opportunity to put in a day trade. So we don't really have much else to add then, other than, well, we should mention, we did talk about gold breaking, and we talked about, you know, that we didn't believe there was going to be any inflation coming down the forefront, and we're not going to get into the big discussion here today on that, on this update, because, you know, I could talk probably forever on that, but let's just look at what's happened here today on the gold front, and we can just kind of zoom in here and looking at this comparison now between gold, the darker line here, and oil, the blue line here. You can see we had a turn up in oil today, and we had a turn down in gold today, and we talked about them generally moving in the same direction. Well, I think gold is an absolute Wall Street trap that they're hyping, talking $1,500, $2,000 gold. I don't think it's going to happen. There's not going to be any hyperinflation. In fact, there's not going to be any inflation the way the government's talking about monetizing the debt. The best thing they've talked about, that's not going to cycle new money into the economy. That's going to create inflation the way they're going to do it. So we're all good with that. Our analogy, we feel, is spot on, with gold being an absolute short sale of a lifetime right here. So we wanted to just mention and point out here, gold down $30 an ounce here today. Down $30 an ounce. It has not yet broken its primary uptrend. We are going to look to get short gold on any subsequent rallies back into a defined downtrend that we're hoping it's going to develop. Get short gold for the long term via some put options or shorting some stocks in general, but we are very bearish on gold, and we think gold is heading down to sub $500 an ounce in the next year to year and a half. Have yourselves a great evening. Join us in the morning. Thanks for tuning in.